Today's topic is Stock Market 101. Have you been trying to understand the stock market? Don't worry, my friend, because today I will answer 10 questions you need to know to enable you perform well in the stock market. But first, welcome to YourVibe Media. This is a channel where we talk businesses, finances, and personal growth. Back to today's topic, Stock Market 101. 10 questions you need to answer to perform well in the stock market. Number one question is, what is a stock? A stock is when an investor purchases a slice of ownership or partial ownership of a company. Companies will offer their stock to the public when they want to raise capital, and companies need this capital for expansion of the business or for operational cost. And when we investors, their stock, we help them raise the capital and we become shareholders. You will ask, what is in it for us when we become shareholders? We can be invited to the company's annual meetings, and we can also have voting rights depending on the class of shares we purchased. The shares we purchased can appreciate in value depending on the performance of the company. As investors, profit in this venture through dividends and capital gain. Number two question, what are the roles of the stock exchanges? Examples of the stock exchanges are New York Stock Exchange and Nasdaq. These are financial marketplaces where the sellers of securities are being matched with the buyers of the same security. By security, I mean stock, bonds, mutual funds, ETFs, which is exchange traded funds. These exchanges are regulated. That is why they provide transparency. For us as investors, we have to open an individual brokerage account through a brokerage platform. That is how we become players in the stock market. Examples of brokerage platforms are Fidelity, Vanguard, Schwab, and the list goes on and on. When we are choosing a brokerage platform, we have to make sure that it is regulated. We also have to make sure that they are secure so we can effectively and securely execute our trade. Allow you to trade in fractional shares. They will also have educational resources, and they will also have research tools. They should also have no minimums. Number 3, what are the bull and bear market? The bull and the bear market are market trends. The bull market is like a charging bull. That is when there is optimism in the market and the prices of stock will go up. While the bear market is when there is pessimism in the market and the prices of stock will go down. Investors will use these to strategize. Some investors will purchase stock during the bull market because they know the prices of their stock will go up. While some investors will purchase during the bear market because they know they will get a good deal, they will get low prices for their stock, and then they will wait until the bull market comes around and the prices of their stock will go up. So the bull and the bear market are market cycles. Number 4, what are market indices? Examples of market indices are the S&P 500 and the Dow Jones Industrial Average. The S&P 500 contains a basket of stock. It has 500 of the best performing American companies, while the Dow Jones Industrial Average contains 30 major companies. Investors use these indices to gauge the performance of their investments. Also, investors will use index funds and ETFs to mimic the performance of these indices. Number 5, what is a dividend and what is a capital gain? Dividend is when a company makes profit, but instead of reinvesting this profit into the business, they decide to pay it out to their shareholders in form of dividend. Capital gain is when we as investors purchase stock, and the stock we purchase appreciates in value and we decide to sell. The profit we make in that sale is called capital gain. You have to discuss with your CPA for you to understand the tax implication of capital gain. Number 6, what is risk and return? Every investment carries a risk. This is the possibility of you losing your money or not getting enough return or not getting the desired return. Investors will use diversification as a tool to mitigate risk. But remember, you can mitigate risk, but you cannot fully eradicate risk. A common strategy that investors use is to have a mix of dividend-paying stock and growth stock in their portfolio. Number 7, what is a market order and what is a limit order? Market order is when we as investors, when we decide to sell or purchase a stock, and we purchase or sell the stock at the prevailing market price. Limit order is when we as investors will set a precise price at which our sale or our purchase will be executed. The advantage of market order is that you're able to execute your trade quickly or quicker. But the advantage of limit order is that you're able to determine the price you want. Number 8 is, what is diversification? Diversification is a tool that investors use to mitigate risk. You can diversify across asset class. That is, you can diversify across stock, bonds, mutual funds, ETF. You can diversify across sector like energy sector, financial sector, health sector, consumer sector. and the list goes on. You can also diversify across geographical location. Example, if you're a resident of the US and you decide to invest in emerging markets overseas, maybe in Asia, in Europe, in Africa, you are diversifying across geographical location. Number 9, economic indices. By economic indices, we mean inflation rate, unemployment rate, GDP, which is gross domestic product. When there's positive indicator in the economy, there is optimism and the prices of stock will go up. When there is negative indicator in the economy, there is pessimism and the prices of stock will come down. Number 10 question, and the final one. What is long-term and what is short-term approach? Deciding on the approach to take is an individual preference. It also depends on your risk tolerance. When you determine to use the long-term approach, you're able to benefit from the power of compounding. But when you take the short-term approach, or you lose the benefits of power of compounding. My dear friend, here it is. The 10 questions you need to answer for you to perform well in the stock market. Thank you so much for being part of today, and I hope to see you in the next video. Bye.